folks, Dan Frio here with your real estate update for July 14th, 2024. So the reason why people watch me is they're trying to figure out what's going on with these and the whys behind it. So what's on today's agenda is right through here. We had President Trump once again coming out and threatening the EU and Mexico with 30% tariffs. I'm going to show you how the markets are reacting to that. We also are looking at some data that the Federal Reserve will be monitoring because they're going to meet in 2 weeks or just a little over 2 weeks, tell us what exactly they're going to do. What they focus in on is this data right through here. They focus in on the economic data through here, and we're going to get pieces of all this information this week that will be affecting these things over through here. So let's get to today's agenda so I can explain to you guys what's going on today and what to expect this week. So folks, my name is Dan Frio. I try to report twice a day to inform you guys what's going on with those and the whys behind it. You have to understand the whys. The reason why I do it is I'm actually a mortgage loan officer. I'm licensed in all 50 states as well as Puerto Rico. So put my 35 years of experience to work for you guys. We do have a slogan here. It's one application, one credit pull. We're going to shop your loan over 35 different lenders now. How do we do that? I'm going to give you that information at the end of this video. So let's get to today's news, folks. So let's get over to it. So we woke up this morning and here's what we got. President Trump's threatening once again higher tariffs on the EU and Mexico. We're going to see how these fare out. He's telling everybody they got till August 1st to negotiate. So that's what we're working on right behind the scenes, seeing how this is going to affect rates today. But this is going to be a long drawn out process, folks. So we're going to focus in on this every day and seeing how many countries and how many tariffs get settled over the next couple weeks between here and August 1st. We're also going to focus in on right through here. The Federal Reserve is going to meet in 16 days. They're expected to do this. Let's get over to the probability charts. They're expected to do nothing at this meeting. They're not going to change rates. There's a 95.3% chance they're going to keep rates at 4.25 to 4.5 rate where they are right through here. They're saying now at the September meeting, there is a 61% chance of cutting rates. So that's the biggest chance we have basically throughout all of this year and all of next year. So look for the Fed to cut rates at the next meeting in September. Does that mean mortgage rates are going to actually drop? No. Because remember last September when the Federal Reserve cut rates 0.5% and then mortgage rates jumped from 6.2 to 7.2 in about 5 business days. So protect yourself from that. Be prepared if these rates take a spike up or also if they take a major plummet down. I'm going to explain to you how you guys can use my services to protect you both ways. So let's get over to right through here. Here's what the Federal Reserve monitors, and we're going to skim through these real quick because I want to get to today's economic calendar to show you how it's going to fill in all these gaps. So right now, here's the federal funds rate. This is the rate the Federal Reserve controls. It's basically the front end of the yield curve, and this is why rates aren't going to get to any 5% on mortgage rates anytime soon. This has to go to about 2, and then you might see interest rates getting down the 5. So until you see this really move down to about 2s or 3s, mortgage rates aren't going to come down to 5s anytime soon. So we're going to stay in the 6% range. But what signals are we getting right now? So we're going to look at inflation. That's the PCE number. We're going to look at the unemployment rate, and we're also going to look at the GDP numbers. We have a lot of this data coming in this week right through here. So here's the economic calendar we have for the week. I hope I don't have to refresh this. Let's see if it comes through for me. Oh, let's go and refresh it real quick. If you ever use Bloomberg Calendar, it's what I use. Just go to bloombergcalendar.com, but you do have to set your filters here so you make sure you get the economic news that you really want. So I'm going to go down through here and I'm going to filter I want the U.S. data. I want all the categories through here because we need all that. And I'm going to check down to two highlights to 3 highlights to get a little more data for this week so I can explain some things to you guys. So based on that here, let's go through and see what data we have coming in this week. So let's get over to it real quick. On Tuesday, really no news coming in today, but on Tuesday, we have the CPI number coming in. This is major news, folks. Okay, the CPI is consumer inflation that me and you monitor and the markets monitor a lot of times. The Federal Reserve, they monitor the PCE. This does track fairly similar together. So let's get over to that. What's expected? Well, you got different versions of the CPI that come out. Consumer inflation, that's what this means. CPI. Think of the C on the front of that as consumer. The next day, we're going to get PPI. Okay, think of the P on the front of that as producer. So we're going to get consumer inflation this week and producer inflation. Let's get over to look at where the numbers were, what my expectations are. So if you look at the CPI, you're going to get core, and you're going to get just regular CPI. You're also going to get month over month and year over year. So last reading, let's go down through and see what they came in last time. The reading on the core was 2.8. Actually, I think it was right on point. They're expecting it to jump to 3. This is going to give us an inclination of where consumer prices are. I don't think it's going to go that high, folks. And I'll give you a reason here in a second. We have month-over-month CPI. It was last reading was 0.2, but it was revised to 0.1. Okay, that's a big number. Then they're expecting it to go to 0.3. I don't think that number is going to go that high. But if it does, if these numbers stay on point, well, you'll see the markets kind of just stabilize. If the numbers come in a little bit better, that's going to be good news, and you might see the markets rally. If the number comes in a little worse than expected, what does that mean? Well, it means inflation's getting a little bit hotter than expected. So this could be a catalyst to the market, but okay, we're going to get the CPI for consumers through here year over year and the regular CPI. Let's go down through here. And then the next day, we're going to get PPI. This is producer inflation. Now, here's why I don't think the consumer inflation is going to be that hot. The last reading when it came through, it was kind of similar to what they're giving us right through here. It was about 0.1. Well, that's where they came in. They expected these to come in at like 0.2, 0.3. Okay, they actually came in lower than expected. Okay, they both came in at 0.1 the last time. This is producer inflation. Now they're saying they're going up, the month over month is going to go up to 0.3 and on the PPI, and then the core is going to go up to 0.2. All this means is they're saying producer inflation is going to go up and consumer inflation is going to go up as well. Well, we're going to see how this floats through, because last time we got these readings, they actually surprised on the downside. Okay, so that's what was expected. So as long as these come in at point or lower, you'll see the markets kind of just faring well. If it comes in lower, it's going to do well. But if it comes in higher, that's going to be now, okay, the markets are going to say this, well, inflation's a little bit hotter than we expect. Not good news. So the markets will crash. I won't say crash. They'll pull back off of that. And then also interest rates will jump off of that. So as the inflation numbers come in this week, folks, just look at the core inflation on the CPI, same thing on the PPI. Those numbers are hotter than expected. You're going to see the markets pull back on stocks, bonds, or stocks and cryptos, and you're going to see interest rates jumping a little bit off this news. Then we go to the rest of the, on Wednesday, really not too much there, industrial production. That'll help us on this front as well, right through here on GDP. It'll give us a little bit of an insight on how productivity is in the United States. And then we go to Thursday. Now on Thursday, here's where a lot of these numbers start to fill in too. Continued jobless claims and initial jobless claims. Are people losing their jobs and having a tough time getting a job back? Okay, that's what it's going to tell us on Thursday. Then it's also going to tell us is core retail sales. How are sales? What are people doing? Are they buying in robust amounts? Are they pulling back? We're also going to look at prime days last week, shopping days, to see how they fared versus previous years and seeing how the consumer fares on that. And I'll do that at the closing bell today. Export prices and import prices, we'll pay attention to that as well, because this is a big catalyst of what's going on over through here when it comes to threats of tariffs and everything else. So that's the news that you really need to focus in on. Did you get a trend on the data we're looking at here? It's how consumer prices are faring off all the tariffs. So think about it, the tariffs and the big, beautiful tax bill. Big, beautiful tax bill is past us. The tariffs are still getting worked on. So as they get worked on, if it's causing more and more inflation, you're going to see rates going up and the market's not doing well. As long as inflation's kind of in check or a little bit below expectations, because a lot of analysts are saying, these tariffs and big, beautiful tax bill is going to skyrocket our debt. But then on Friday, we actually had a surplus, one of the first times in a long time that we had a surplus on our national debt. So if you didn't check out that one, check out Friday's video. I'll put that right up through here. You can check out what I expected this week in the news, and I also give you a lot of details that's coming this week as well in the Friday's live event. So check that out. You're going to find a lot of information there as well. So folks, that's what we're looking at so far this week. If you look at the stock market right now, the Dow Jones and the equity markets, we're just saying they're in the green. But when's the last time you saw the S&P up 3, or Dow Jones up 46? So the markets are just on standby right now, just waiting for some news to do one of things. Either market's going to continue to rally, it's pretty frothy right now, or if there's any news on the downside, it's just going to give investors just a reason to kind of pull back and maybe make a little correction in the markets that we might be seeing. So that's what we're seeing across through here. The VIX is up 4% to 17. Not really scared about that. I don't like it when it gets in the 20s. Let's see what oil's doing for us. Oil is down to $67 a barrel. Oil steady near 3-week high on signs of tighter supply. But OPEC just came out and said that they're going to increase by 700,000 barrels a day. So that should relieve some pressures over there. And then this thing over here, this is going crazy, folks. Bitcoin. I don't know if you follow me on my Stock Talk Tuesday, but I actually brought up Bitcoin. I actually bought up Bitcoin back in last September. We put a position in on Bitcoin ×2, and actually we doubled our money on that. So check out my Stock Talk Tuesdays if you want to understand how to invest, and also how to understand how to invest in Bitcoin, because I showed you something there in Yahoo Finance where you can track our portfolio that we create. I'll show it to you real quick for anybody out there. So if you've never watched me on Stock Talk Tuesday, what we did is we created a portfolio for you guys to understand the markets, and we actually I knew Bitcoin was going to rally as soon as President Trump was elected back on election time. I'm like, okay, he's a pro-president or a pro-crypto president, so the market's going to rally right through here. Here is a Bitcoin position that we put in, BITX. This is Bitcoin basically ×2. If you look over here, that position is up 177% on the year. And when did we buy it? We actually bought that position 9/9 of 2024. So we're coming up on a year's time, and we're up 176% on our money. So if you want to check out me talking about stocks, bonds, and cryptocurrency and how you should invest, or at least learn the systems, check out my Stock Talk Tuesday. I think you're going to be completely surprised on a lot of knowledge I know also about investing as well. So my name is Dan Frio, folks. I do these videos twice a day for you to stay abreast of what's going on with these and the whys behind it. But I do have a slogan here. It's one application, one credit pool. We're going to shop your loan to over 30 different lenders. Now, how do we do that? Well, folks, I work at a federal bank, so I'm actually a federally licensed mortgage loan officer, so I'm licensed in all 50 states as well as Puerto Rico. The cool thing about my bank is they're also set up with 30, right now I think it's 35 total lenders that we have. So think of us as a federal bank, but also a large mortgage brokerage. We're a mortgage brokerage that satisfies the whole country. So what I do is I can use our programs as well as 33 other banks' programs. I can use their rates, their programs, their everything. And one of the programs out there right now that we're assisting people with is right through here. If you're looking to buy a home, check out and see if you qualify for the $7,000 grant program. It's up to $7,000 to help you guys navigate home ownership. If you're looking to refinance, please check out my refinance video right through here. And if you're looking to get different quotes, let's say you put in a quote and you went to 2 or 3 different banks and they gave you quotes, and now you're like, okay, Dan, how can you help me navigate with over 30 different lenders? Well, go to their loan estimate review right through here. You're going to click that button. What I want you to do is upload your loan estimate. Every time you reach out to a bank, they take your application and pull your credit. They have to send you a loan estimate. Upload it here. Let me shop around for you. Take the heavy lifting off of it. I'm going to check and see if with 33 other lenders, can we get you a lower rate? Can we get you a lower fees? In most cases, we're doing both. So check out the loan estimate tab, and I'll send you a completely private video for you, analyzing your data specifically, and I'll walk you through the numbers. So check out that as well, folks. So that's it for today's video. I will be back at the closing bell to let you know how this mess ends for the day. But for right now, it looks like mortgage rates are going to tick up just a little bit today. Nothing crazy, but we're on a steady downturn. We're just waiting for this to turn around with some good news, hopefully from the government or the Fed. Thanks for watching, folks. See you later today. Bye-bye.